Okay, very good morning. Monday the 19th of June. Hope you all had a fantastic weekend. And just taking a look at the charts this morning, as we can see, centre left DAX just continuing to push up to new session highs. Just looking across the board, a bit of a mixed picture overall, but if you're looking at risk assets, things like gold lower at the moment, equities starting to rally. Just having a look at dollar yen trading higher as well at the moment, so some relative risk on. We did have the second final part of the French election, and it went the way as most were expecting, a strong majority for Macron. So maybe it's just a bit of a read across from that this morning. We'll have a look at that in a bit more detail shortly, but the DAX on the upside, we're keeping an eye on the high print that we had from last week, coming in at 12,915. I guess if we go anything beyond there, I mean, I'm looking at the SEP contract, so you can see it's pretty illiquid going further back. If we have a look on a daily continuation though, really that's the big level, was that spike high that we had on the 14th. And so very close to record territory again in these European indices. And it does follow suit with the US in sympathy, ticking higher this morning. R1 just about to be tested in the case of the S&P. Relative interesting level coming up here on the intraday, should we go above that point, 24.43 and a quarter. So that would be the high as well from that 14th, and also on the 9th. If we put that on a little bit of a longer dated chart, excuse me. Yeah, again, this is broaching on record high territory again. And there's been a big M&A deal kind of confirmed, a bit more details over the weekend. Amazon for Whole Foods, we'll have a look at that as well in the briefing in terms of when we get into the news flow. But obviously for today, within striking distance, those record high levels, so certainly for this week, that'd be the top side to keep a very close eye on. Consequently, higher equities go usually equates to more pressure downside on spot gold. I guess if we look at that, looking at the last couple of weeks, really since, I mean, this is looking at a daily continuation chart, so the last week, pretty strong downward trend that we had after we had that double top tested. So pretty strong level now on the upside, where we hit back on the 17th of April. It got just a touch above there. Before then we've had this really strong move back to the downside. And then obviously as well last week you had the hike from the Fed, but the commentary not quite as dovish as what some may have been looking for. The Fed certainly still remaining on track for another rate hike this year, irrespective of the fact that the market might have priced that out to some respect. So keeping gold lower. And as I say, things like the French political situation, if not improving further, with Macron able to just cement that victory that he had with that first round of presidential elections, probably about 6 weeks ago now or so. Elsewhere in fixed income then, T-notes pretty flat. We found a bit of support at pivot this morning. Let's just broaden this out a little bit. Looking here, that was obviously the data that we had last week. That was the week CPI core inflation at 1.7%, and retail sales was disappointing. You then had the Fed decision, which was not quite as dovish as some had feared. So prices started to come back, and then we've kind of steadied out here around pivot more recently. I guess if you're looking on the intraday, probably just playing the downside. So when it gets down to 126.16, and then upside, the high print from Friday's session with R1 sitting 2 ticks above is probably going to be an interesting range to look at over the coming week. Looking at bunds, on a 60-minute. Just where we are at the moment, trading at 67 down here. I guess the daily pivot is proving what was that? Yes, or Friday's pivot. Bit of a barrier for price action. Not really too much here. Looks greatly interesting at this point. But let's get into the news flow. There's a couple of interesting things developing, obviously, on the UK side of things. The pound, if anything, still remaining fairly buoyant, despite the press that you're probably reading, which is continuing to put Theresa May under an immense amount of pressure about her future leadership of the Conservative Party, and therefore net the government. Just having a look at cable, quite an interesting level already this morning, because we're not too far away from the high printed on the 14th. So at the moment, finding a bit of resistance around R1, which was also Friday's high. That's kind of the first barrier on the upside, I'd say, but any move above there, then we'll be eyeing that 28.56. And then obviously we've got this gap fill that would need to take place, if that were the case, from the actual hung parliament situation. Now, looking at the headlines, May obviously facing a critical week. Doubts about her future grow. Media prospects may hang on DUP deal with Queen's speech performance. So you've got the Queen's speech, that'll be coming on Wednesday, kind of outlining then the agenda, if you like, for what the government's plans will be set out. And it comes amid some quite interesting survey data that's come out from particularly a pollster that was fairly accurate in regards to the election, and that's Survation. So a couple of things in which they found, and three main questions that were asked. Should Britain leave the customs union? And this was out to the normal kind of general public polling. Should Britain leave the customs union? 69% of people say no. Do you agree with the Prime Minister that no deal is better than a bad deal? 65% of people think no. Should we hold a second referendum on the terms of Brussels deal? The slight balance says yes, 53%. So if you're trying to capture a nation's sentiment as we get underway today, marking the first day of formal talks and negotiations between Britain and the EU, the general public of Britain would suggest that we do not want a hard Brexit. If it wasn't obvious enough from the result of the election, the fact that the Tories' whole headline billing was built upon a hard Brexit, and that failed miserably in the general election, well, this is only kind of verifying that perspective. In fact, go one further, Survation, they've released their one of only, I think, 2 polls that have come out after the election, and Labour now, let me have a look. Actually, this isn't the correct one. Let me just bring it up. I did see it earlier this morning, but essentially Labour have taken the lead. So new Survation voting poll has Labour 3% ahead. The Conservatives down 1 at 41, Labour up 4 at 44% against the changes on the 5th of June. So anyone who was thinking about what if there was a second general election in quite quick succession, then certainly if it was to happen any time in the near future, latest polling would suggest that actually Labour would outperform, and potentially you could be looking at a Labour-led government. Whether or not we'll get to that point, obviously yet to be seen. Some of the commentary over the weekend was more to do with calming, I would say, national sentiment going in towards these critical talks with Europe. So the Chancellor, Philip Hammond, was on TV yesterday, interviewed and indicated that a gentle departure from the EU should be targeted. He also rejected the mantra, no deal is better than a bad deal. Now, we talked about this before. Philip Hammond obviously being someone placing greatest emphasis on the performance of the economy, there is no way that he would probably want a hard Brexit. And so I would say, unsurprising for him to say that, but is that view shared amongst the majority of the Conservatives is yet to be seen. Some of the more senior backbenchers, if you like, have made some noises over the weekend about wanting to still pursue this hard Brexit line, but I'd say this is getting more and more unlikely as time goes by. Boris Johnson still remains, according to the Survation poll that came out at the weekend, the most favourite to succeed Theresa May in the case that she did step aside. But I guess I have to ask myself the question, even if Boris became the PM under a Tory-led government, would he even be able to pursue a hard Brexit? Even though he did campaign for it, I have my doubts on whether or not that would be a credible kind of push from him in particular. Looking at cable this morning, obviously we have edged a little higher here, and it brings about quite interesting debates about, why hasn't cable fallen? If I look at this kind of chart we've looked at a couple times over the last few weeks, we're pretty much back at that key level. There's that green level I've got down the middle of the charts, the one I've had on there for many months, that being that post-referendum low, the key break on the Tory conference in October 2016, defining the upside of the range of 125 to 128. We broke that on the snap election call, broke below it on the hung parliament, and then here we are, right back at that level. In fact, sitting 128 this morning. But a lot of people were looking at a hung parliament and eyeing a break of 125 and below in the kind of short term, and that obviously hasn't occurred. And why is that? I mean, there's two real ways to look at it. You've got rising inflation. We saw that CPI print, the highest since June 2013 at 2.9%. And obviously we had a big surprise actually from the vote split from the Bank of England. If you remember, it came in at 5-3. Most people were, well, everyone was anticipating 7-1. Christine Forbes, it was her last meeting before seeing out her term as a MPC member. She was, of course, expected to vote to hike. She had done for the previous few months. But surprising to see Michael Saunders and Ian McCafferty following her and actually thinking that, you know what, we should have a hike right now. X her out, and 5-2 obviously doesn't sound quite as punchy as 5-3 on a vote split. But certainly you would say there's a bit of a shift and balance towards the MPC thinking. Do I think that means we're any closer to a near-term rate hike? Personally, I think no. And actually, I think what's probably more a factor here in negating any outright sell-off, and the fact that we've recovered back to 128 after the initial run lower following the hung parliament, is that I think that the UK has no other alternative but to execute a soft Brexit. I just do not believe you can have a hard Brexit. If any Brexit at all. I was talking about this with Safe last week. Vass is looking at me with a very troubled face, but the one thing that politics globally has proven is that sentiment can change like the change of wind in these present conditions, and I don't think that I think you have to be realistic that there is a probability of no Brexit. I would probably currently give that an incredibly low percentage, but I don't think that it's off the table at this point. Let's not forget that legally we can, in effect, just reverse the call, and that is actually a plausible scenario. But we're nowhere near that point as yet. What I'm saying is that I think the people of Britain, of which the governing parties, whichever they may be, right or left, have their main job is to fulfill the wish of what the UK people want. And at this point in time, following the hung parliament, following the latest polls and information that's coming out, the questions that are being put to the public is they don't want to leave the single market, they don't want to leave the customs union, they do want to say on the actual Brexit deal, these are all things which are strongly against the idea of having a hard Brexit. If there is a soft Brexit, and obviously negotiations get underway, I wouldn't be expecting too much giveaway from the likes of David Davis. I think his job and the Brexit negotiation team are slightly separate from the government. I think the government might start moving towards the softer Brexit side, but for the time being, the negotiation team will continue to play quite hardball at these first kind of coming to the table discussions that are going to take place for the next couple of weeks. On that front, let's have a look at this table here. These are some Brexit dates to be aware of. So as I say, we officially get underway in Brussels today. UK government lays out legislative process in the Queen's speech. That'll be on Wednesday. EU leaders meet in Brussels then. So it's going to be quite a heavy Brexit week, if you like, in terms of potential commentary, factored really on the second half of the week. But the Queen's speech might be telling as towards the Conservative stance going into those talks. Second round of negotiations happens in mid-July, and then we go further out down the timetable. A lot of people questioning about how long can Theresa May last. Well, if she doesn't go immediately, once you get the first and second round of negotiations out the way, potentially October is a time where some people have also looked at the potential that she could step aside, given that's the ruling party Conservative annual conference. It happens on the 1st to the 4th of October. Okay, a quick look across some of the other headlines then, just to wrap up the briefing for this morning. And let's move over to France, where Macron wins a solid majority in the French Assembly. So party and allies secure 350 seats, which is an absolutely phenomenal performance when you think about his party is only 14 months old. And again, it's a very clear divide that we're seeing at the moment, where the Socialist Party in France absolutely crushed, whereas in the UK we are seemingly going that way for the first time in decades. But looking at the French situation, what was quite interesting was there was a record low turnout. It was estimated at 44%. And so some people, like the most left-leaning Mélenchon, has suggested that it doesn't give Macron legitimacy, essentially. The party of which Mélenchon represents had the biggest abstention rate out of all of the political parties at play, and they're suggesting that the number that Macron has secured is somewhat inflated by the lack of participation that was seen with this record low turnout, which I guess statistically makes sense, but that's not to say that Macron has fulfilled what the polls were suggesting and gone on to continue a very strong performance since winning that presidential race. If anything, as per last week, I'd say this probably just adds an era of calm to the situation, of which obviously European politics was a huge risk at the beginning of the year, but this has gone so far the way of adding more calm to the markets in that regard. Taking a look slightly elsewhere, oil trading sub $45 this morning. I'm not sure if any of you track that US Baker Hughes rig count number at the end of the week on Friday, because essentially it showed that US drillers added for a 22nd straight week, the longest stretch in 3 decades that US rigs are coming back online. Now, those who've sat through my commodity lecture will remember that graphic where the technology, the change in method in shale production, which has improved immensely over the last couple of years. I think in the period of just 4 years, the drilling time on an individual rig site has gone from plus 50 days down to 20, for example. The productivity per actual site has improved dramatically, which has meant that even though we're nowhere near kind of pre-2014, when oil prices really dropped from that way above 100 level. US rigs were more like 1200. We're only about 750 or so at the moment, but don't forget the productivity has almost doubled out of each site, and therefore we are pumping, you know, nearer 10 or 9.1 million is kind of where we are at the moment. So this just continues, and it continues then to put question marks over the ability and future of OPEC to be a meaningful power in influencing global crude prices. And as such, if we look at crude at the moment, there was a really key level we were looking at last week. Let's see where we are at the moment. If I put this on a daily continuation, it kind of tells you quite an interesting story, I guess, from where we were. This was kind of the late May or late April, early May was when people were panicking about the speed of US output increasing. This was then the point of this kind of period here, was pre the actual meeting occurring in Vienna. The OPEC meeting didn't actually happen until right at the end. We peaked out at around 52, then we fell sharply, irrespective of the fact that they extended the production cuts by 9 months, and here we are all the way back down to sub 45 at the moment. And obviously this 43.76 level, or around $44, will be really important for crude prices going forward. We get below there, it starts to open up the prospects of then potentials for runs lower. The next point of interest probably 42.17, around there, that being the low that was seen just around the US elections. There's also a bit of resistance previously seen back in March of 2016. A break below there, psychologically you've then got 40 and then below. So some pretty interesting levels to watch out for on the week, I'd say, as far as crude oil is concerned. And obviously the lower that we go, you kind of know the drill by now, it's the more likely that OPEC's going to start talking up the market again. The one thing though that I would say is OPEC cannot continue to talk up the market. It's proving very limited in the gains that they actually can impart on the actual underlying price. Actual concrete action might well need to take place again. If you think about it, the agreement that they've put in place this time round takes us all the way through to March 2018. If they don't intervene again and US output continues to rise at the pace that it is, you know, who knows where oil might be on the downside. What I'm saying then is that I think that they're going to probably have to step in between now and March 18th and do something more. Do something more probably means do a deeper cut, keep the time frame the same but cut more than what they've agreed at the moment, which I believe is something circa to 1.8 million. Step it up to 2.5. Obviously this then means that individual OPEC nations are producing less oil. Selling less oil means less revenue generated by economies that are heavily geared and one-dimensional to being highly driven from oil sales. This lack of diversification, if you like, is absolutely what's going to be detrimental to a lot of these countries within OPEC. So, as you can tell, I still remain particularly bearish about the situation for them as a cartel and individually as oil-producing nations. So, still favouring potential more pressure on the downside for oil as we go through the week and weeks to come. Okay, quickly, just to round off before we look at the calendar, this was one interesting story I thought from the weekend. This was Amazon to acquire Whole Foods for just shy of $14 billion. Now, yes, it's a pretty big M&A deal, which kind of says a lot when you have companies having the appetite to step in the market and spend this type of money. But Amazon, you could say, not short of a penny or two at this present point. But what I thought was really interesting was about Amazon You know, this is why I'm so much more bullish Amazon and Google than I am someone like Apple, because these guys are really changing the game a lot more, a bit more forward thinking, if you like, in their approach, rather than being reactive and being so dependent on a brand like Apple. What I thought was interesting about Amazon was this new footprint. And what you can see here are the blue dots, which signify the whole food stores, and then the Amazon facilities. So essentially what they've done, Amazon, is they've just bought literally hundreds and hundreds and hundreds of physical brick and mortar locations across the entire states of America. So if you're thinking about Amazon wanting to become more of a staple, if you like, to provide more regular goods rather than these odd bits that you buy online, you know, and thinking of things like drone technology and delivery and so on and so forth, what they've done is they've secured deliverable outlets, if you like, into geographic key locations to serve the consumer. I think this is a really clever and quite forward-thinking way of them planning for the future. One thing I did read here as well earlier was that some of the competitors, here we go, so on Friday when this news started to break, Walmart fell 7%, Kroger fell 17%. You know, these are, by Amazon taking this move into the kind of retail sector in regards to grocery market, this is going to really be concerning for some of those other bigger players, and hence the reason they fell so sharply. You've got this new kind of company on the street that isn't a startup. This is an absolute beast of a company in Amazon with plenty of cash to put behind a new pet project, if you like. And so some of those US retailers really got hit hard on the back of this. So quite an interesting story for the long term. This obviously comes of Amazon just a few weeks ago breaching $1,000 a share mark. So they're continuing to be innovative in that sense. Okay, quick look at the calendar for this week. Very, very quiet in terms of scheduled economic data, so please do keep that in mind. Therefore, you know, identify key technical levels. The overall, I'd say, sentiment is still one of slight positivity emanating from potentially a bit of a read across from the macro situation, a bit of leaning towards a soft Brexit. Couple of upside levels, we're not too far away in the DAX and S&P from all-time highs to be watched, and the key level on the upside in cable as discussed, and downside in oil. So just be kind of looking at the technicals today, and also keeping half an ear on the tentative talks getting underway in Brussels for the Brexit situation. Some speakers elsewhere. You got Fed's Dudley this afternoon, who is a voter from the Fed, as too is Fed's Evans, but that's not until overnight. Looking at the week as a whole, you can see Monday really is the most quietest day. Tuesday, for any Aussie traders overnight, RBA meeting minutes, but again it's pretty quiet. Fed speakers Fisher, Rosengren, Kaplan. This is quite usual, I'd say. After a week of Fed decision, you tend to get quite a few speakers as they try to kind of make sure that the market is of the same belief as the direction that the Fed are wanting policy to go in, so managing market expectations. API crude oil inventories as per usual in the evening, and that to follow with the DOEs on Wednesday. Queen's speech also Wednesday. Thursday, regular weekly jobless claims from Canada, a couple of interesting data points on the retail and employment situation. And then Friday, you get the various European market, service and manufacturing PMIs. But overall, you can see it's pretty quiet. Not really any major data forthcoming. But I'd say what really defines the week from a tradable point of view potentially is the Brexit talks get underway today. You've got the Queen's speech on Wednesday, then you've got EU Brussels meetings about Brexit on Thursday, Friday. So really I'd be looking for developments on that regard to potentially create some opportunity as we get through the week. Okay guys, going to leave it at that. Short briefing for this morning. So have a good session, have a good week, and I'll see you in the chat room. Thank you.